Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Ultramarine. Is it a buy or an avoid at these levels? So let's get started. First of all, disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Ultramarine, here's a small request that kindly support me on Patreon. And once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up from time to time. Now about the company, Ultramarine was established in 1960 and it is the largest manufacturer of ultramarine blue and synthetic detergents and pigments. Manufacturing operations are majorly in Chennai and they exports across centers across the globe. They also produce surfactants, detergents and aids. Serves a number of industries in dyes, detergents, washes, etc. The market cap of the company is around 880 crores and it has declined from the top. If you look at numbers, then sales were up 85% to around 150 crores, whereas profit dipped by 15%. So margins were hit extremely badly, where sales went up, but there were less profitability. High cost of raw material meant that margins were hit very badly. ROE of around 17% has dipped from over 20%. Operating profit margin has also declined. In terms of performance, stock has been a drag for investors in the short term. Margins are suffering because of raw material cost. Margins have suffered extremely badly and have been an outperformer from 2018 to 21, and that's where it came into prominent. But over the last 6 months, it has declined sharply and it looks stretched, and the stock is going down. Cost may remain elevated with the you can say the oil prices being up and other raw material prices being up. So whatever products that go into making the pigments, etc., and surfactants and so on and so forth, that is going to go up, and that's why costs for all FMCG companies or consumer companies are going to go up going forward. So in that regard, margins will remain under pressure, and you can say bottom line will remain weak for the next 2-3 quarters. If you look at the technicals, then there is strong support around the 265 270 region. It has been in a downtrend and has fallen from around 550 600 levels. Around 265 270, if somebody have can probably accumulate a bit. The big breakout is expected above 340 levels. It is looking weak and stock may go into consolidation now or may decline even further as we see elevated oil prices at the moment. So it is a good for trading play as well, but you need to keep strict stop losses, and probably my point of view here is to stay away from less than 5,000 crore market cap company. That would be a better way of looking at it. Yes, if you want to invest into it on very abysmal days, and if it drops below 250 240, gets to very attractive levels, that's where one can look to buy into the stock. So in my opinion, avoid for the moment. The stock is still not that cheap because the numbers are not going to come in very quickly. So let numbers get better, let numbers come in probably 2-3 quarters down the line. If you have it, then hold on to the stock, wait for rallies to exit, or buy on very deep you can say cuts on the stock. See, chemical sector altogether has gone into a downtrend, and we have seen that happening, and have less than 5% exposure into such stocks. Remember that high raw material costs will affect such companies as Ultramarine. So this was my video on Ultramarine. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. Thanks a lot for watching.